Welcome back to Commodities Market now. Oil prices rose today as futures traders bet the markets may have bottomed after a recent steep fall, even as physical markets remain bloated by oversupply, especially from a relentless rise in U.S. drilling. Brent crude futures were trading at $48.44 per barrel, up 29 cents from their last close. U.S. West Texas Intermediate crude futures were at $46.09 per barrel, up 26 cents. Now, traders say the price rises came on the back of speculative traders upping their investment into crude futures by taking on large volumes of long positions, which will profit from a further price rise. The rise in new long positions comes after Brent and WTI crude futures have fallen by around 10% below their opening levels on May 25. And gold inched up today as Asian stocks fell and the dollar erased ahead of a U.S. Federal Reserve policy meeting that could give clues on the pace of interest rate hikes over the rest of the year. With the Fed widely expected to raise interest rates at its two-day meeting that ends on Wednesday, the focus will be on any fresh hints on the pace of further tightening in the months to come and next year, and any further details on its plans for trimming its balance sheet. Spot gold was up 0.1% at $1,267 per ounce after shedding 1% in its biggest one-day percentage decline since May 18 in the previous session. U.S. gold futures for August delivery fell 0.2% to $1,269. Away from the markets, South Africa's Buoy Gold $1 billion rights issue aimed at raising capital to help fund its acquisition of U.S. platinum producer Stillwater has been oversubscribed by almost five-fold. Such capital-raising efforts are comparatively rare at the moment in South Africa's troubled mining sector, which is beset by a range of challenges, including policy uncertainty and labor and social unrest. But Buoy, which has built a reputation on its dividend flow, is diversifying away from its home base with its Stillwater acquisition, reducing its exposure to the risks associated with doing business in South Africa. Those risks are underscored by a violent wildcard strike unfolding at Buoy's Cook operation west of Johannesburg, which was triggered by worker resentment at the company's drive to root out illegal miners. And Italy's Eni will start commercial oil and gas production at its Sankofa field off the coast of Ghana in July, 3 months ahead of schedule. The Sankofa field, which will pump 45,000 barrels per day, is phase one of the $7.9 billion offshore Cape 3 Points project that will also produce up to 180 million standard cubic feet of gas daily from nearby Guy-Naim Reserve by the end of next year. The project could raise Ghana's oil output to around 200,000 barrels per day and gas production to more than 300 million standard cubic feet. And Safaricom, Kenya's biggest telecom company, may expand its popular mobile banking service M-Pesa into countries such as Nigeria and Angola, as East Africa's biggest company grapples with regulatory scrutiny in its home market of Kenya. The chief executive officer says the sale of a 35% stake in the Nairobi-based company to Vodacom Group Limited by parent Vodafone Group has enabled Safaricom to look to new markets. The expansion of the mobile banking service will be Safaricom's first significant move since Vodacom's $2.6 billion stake purchase last month, and will enable the company to examine growth opportunities outside its home country, where its market-leading position is under pressure from regulators. We'll take another break. When we come back, the program continues. To stay with us.